Let me introduce myself. My name is Widya Oktafitriani, Accountancy Class 23A NPM 23412022. In this video, I will explain material about income tax. Understand income tax. Definition of income tax. Income tax, PPH, is a tax imposed on income received by individuals or business entities. In Indonesia, income tax is regulated in Law No. 36 of 2008. The following is a detailed explanation of tax income, including the definition, types, tax objects, rates and calculation methods. Income tax is a mandatory levy imposed on individuals and companies based on the amount of income received in 1 year. This tax functions as a source of state income to support development and community welfare. Types of income tax. 1. Income tax, PPH, Article 21. PPH Article 21 is a type of income tax on income in the form of salaries, wages, honorarium and others, where the income is obtained in connection with work carried out by an individual. In its collection, PPH Article 21 uses a progressive tax rate scheme in accordance with Tax Regulations. Point 2. Income tax, PPH, Article 22. PPH Article 22 is a type of PPH imposed on certain business entities. Whether it is a government-owned business entity or a privately owned business entity that carries out business activities related to export or import trade, as well as carrying out luxury goods sales activities. The party collecting income tax. Article the 22nd of may consist of a government treasurer, government agency or institution, and other related institutions. Point 3. Income tax, PPH, Article 23. PPH Article 23 is a type of income tax that is imposed on certain income, such as loan interest, which includes premium interest, discount interest, and others. Then on dividends, royalties, prizes and awards, or imposed on services other than those for which PPH Article 21 has been deducted. Generally, the rate of PPH Article 23 is imposed based on the DPP value or gross amount. The rates applied are 15% and 2% PPH rates depending on the type of tax object. Point 4. Income tax. Article 4 Paragraph 2, Final income tax. PPH Article 4 Paragraph 2 or Final PPH is a type of income tax on income with final deductions. This final PPH cannot be credited with the income tax PPH payable. Consult your tax problems with tax experts, Serpong Tax Consultants. Point 5. Income tax, PPH, Article 25. PPH Article 25 is a type of income tax that is paid in installments. The aim is to ease the burden on taxpayers in paying their annual taxes, where the tax owed is paid within 1 year according to the specified time period. Point 6. Income tax, PPH, Article 26. PPH Article 26 is income tax withheld from business entities in Indonesia. The PPH withholding is carried out on income originating from Indonesia received by foreign taxpayers, where the general rate charged is 20%. Point 7. Income tax, PPH, Article 29. PPH Article 29 is underpaid income tax contained in the Annual Income Tax SPT, where PPH Article 29 can be generated from the value of tax payable in the relevant tax year minus the PPH credit. Consultation on tax matters to make tax matters easier with a Serpong tax consultant. 8. Income tax, PPH, Article 15. PPH Article 15 is a type of income tax that is generally imposed or collected from certain taxpayers, namely groups of taxpayers who operate in certain industrial fields, such as domestic shipping and aviation companies, foreign insurance companies, oil, gas and geothermal drilling companies, and others. Tax subjects are parties who are legally obliged to pay taxes. Simply put, these are individuals or entities that are subject to tax obligations by the state. They are the parties who are the target of tax revenue. In general, tax subjects are divided into several categories. 1. Private person WNI, Indonesian citizen, who resides, or is in Indonesia. WNA, foreign nationals, who reside in Indonesia, or who have income from sources in Indonesia. 2. Undivided inheritance, a person's inheritance that has not been distributed to his heirs. 3. Entity, company or organization that has a legal entity, such as PT, CV, cooperative, foundation. 4. Permanent establishment, but, branch, representative office, or other place of activity of an overseas company that carries out business activities or work in Indonesia, not subject to tax. 1. Foreign country representative office including embassies and consulates, which function as official representatives of foreign countries in Indonesia. 2. Diplomatic and consulate officials who work for a diplomatic mission or consulate of a foreign country and do not receive income from sources other than their position. This exception applies as long as their country of origin provides reciprocal treatment. 3. International organizations that are internationally recognized and have been designated by the Minister of Finance as non-tax subjects, provided they do not carry out other businesses to obtain income from Indonesia other than providing loans to the government. Examples of such international organizations include the IBRD, IMF, and WHO. 4. Government agencies are also not subject to tax, so payments to these agencies are not subject to income tax deductions. Income tax purposes. The purpose of income tax, PPH, is very important in the context of a country's economy and development. Following are some of the main purposes of income tax. 1. Sources of state income. Income tax is one of the main sources of revenue for the government. Income obtained from PPH is used to finance various public programs and activities, such as infrastructure, education, health and other social services. 2. Equalization of income. One of the important goals of income tax is to support equal distribution of income in society. By collecting taxes from individuals or entities with higher incomes, the government can redistribute these revenues to social programs that help disadvantaged groups in society, thereby reducing social inequality. 3. Economic settings. Income taxes also serve as a means of economic regulation. Through appropriate tax policies, the government can influence people's consumption and investment behavior. For example, by providing tax incentives for certain sectors, or imposing high taxes on luxury goods to reduce excessive consumption. 4. Maintain economic stability. Income tax plays a role in maintaining the economic stability of a country. By regulating the amount of money in circulation through taxation, the government can control inflation and ensure healthy economic growth. 5. Encourage community participation. By paying taxes, people are expected to be more involved in the country's development process. Awareness of the importance of contributions through taxes can increase transparency and accountability in public financial management. 6. Protection of domestic industry. Taxes can also be used to protect domestic industry from unfair competition by imposing tax rates on imported goods, thereby encouraging local production. Taxpayer obligations. Taxpayers are individuals, business entities, or other entities who have the obligation to pay taxes in accordance with the laws and regulations in force in a country. Before getting a right, a person must fulfill his obligations first. So there are several obligations that must be fulfilled by taxpayers, as follows. 1. Taxpayer's obligation to register to obtain a taxpayer identification number, NPWP. This is regulated in Article 2 Number 1 of Law Number 28 of 2007 concerning general provisions and tax procedures, that every taxpayer, who has fulfilled the appropriate subjective and objective requirements with the provisions of tax laws and regulations, you must register yourself at the Directorate General's Office. Non-taxable income, PTKP, Point 1. Taxpayer's obligation to report business to obtain confirmation of taxable entrepreneur based on Article 2 Number 2 of Law Number 28 of 2007 concerning general provisions and tax procedures. every taxpayer, as an entrepreneur, is subject to tax based on the 1984 Value-Added Tax Law and its amendments. In other words, every entrepreneur is required to report his business to be confirmed as a taxable entrepreneur, PKP, if he has a minimum turnover of IDR 4.8 billion in one financial year. However, entrepreneurs who have a turnover of less than IDR 4.8 billion can choose to be confirmed as PKP.2. Taxpayers' obligation to make payments, withholding a collection. Every corporate taxpayer and individual taxpayer has the obligation to pay annual income tax. Then, every corporate taxpayer, for the transactions they have carried out, is obliged to deduct PPH Articles 21, 23, 26.1. Taxpayers' obligation to report taxes after making payments and withholding a collections. Every taxpayer has the obligation to report their taxes via annual tax return, SPT, and monthly SPT.2. Taxpayers' obligation to provide accurate data and document information related to bookkeeping for 10 years.